Good afternoon and a very warm welcome to all our viewers to the 39th edition of Cedrus Knowledge Series. We began the Cedrus Knowledge Series amidst the lockdown, where we had one speaker each month who was speaking on topics ranging not just finance but encompassing wealth, health, and overall well being. We'll now play a short video to further introduce Cedrus Wealth Partners. Today, at our 39th edition, it's both a privilege and an honor to have with us Mr. Nilesh Shah. He is the Group President and MD of Kotak Mahindra AMC. Uh, Mr. Shah has been guiding all stakeholders, be it the advisory and distribution fraternity or the investment community, by his vast knowledge and his advice, and his views are highly respected in the investment community, and he's been an exemplary leader, contributing to the economy through his vast experience and knowledge. And he has turned two fund houses into big success stories. One is the Kotak Mahindra AMC, and one is the ICICI Pru AMC earlier. A very warm welcome, sir. We'll now play a short video to further introduce Mr. Shah. Very warm welcome once again to all our viewers, and very warm welcome, sir.
Thank you, Unnati, for those kind words of introduction.
For all our viewers, I would like to inform that this is it's a privilege again to interact with Sir. We had interacted and exchanged dialogue with him earlier, where we discussed the 15-year journey of the markets and contemplating impacts on the economy. Going forward, sir, our Prime Minister, Honorable Narendra Modi ji, he introduced the concept of Amritkal to the entire nation on the 75th Independence Day. And this is his vision, new vision for the new India, that it's a new dawn for India today, uh, which will embark on a new journey in the next 25 years. And this Amrit Kal is based on the five pillars, which is rightly known as the Panch Pran of the for India, which includes the goal of developing India, eliminating the colonial mindset, extreme pride and honor for India, development of unity, and a sense of duty amongst citizens. This Amritkal will be a new vision leading to development and reawakening the sense of trust for the entire globe for India. Which brings me to my first question, sir, that why are these invisible changes happening today, which could spur growth for the Indian economy?
So, Unnati, if we see compared to the past, where are we? Earlier, the talent of India used to go abroad. Prior to 2000, many of smarter brains at IIT, IIM, CA were going abroad for opportunity. Today, many of them are staying back. When we exported talent abroad, they started working in Microsoft, Google, Adobe, IBM, and other companies, and eventually rose to become CEO of those companies. If this talent is staying back in India, they will set up companies here, they'll work in companies here, and eventually make those companies bigger. The second change which is happening in India, like in my generation, if my parents didn't have money, it was very difficult for me to start business. All of us could not become businessmen because our parents didn't have enough money. Now, if you have a business idea, there is private equity, venture capital money available to set up a business, to run a business. Third, talent and capital also requires infrastructure. 30 years ago, 50 years ago, if you wanted to buy oranges in Nagpur and export its pulp or juice, it would have been practically impossible because there was no fast road network, the ports were congested, and power was not available. Today, with all those constraints gone, you can set up those kind of businesses. So India in its Amrit Kal will do well because Indian talent is staying back. They have access to capital through private equity, venture capital ecosystem, and most importantly, they are benefiting from the infrastructure which is built in last 10 years or so.
Very rightly said that this change, what we have seen, that the Indian talent is now staying back and not the talent is not going out of India. I think this is one very important thing which is shaping because the youth is the future of India, and that is what I think is spurring growth. Very rightly said, and a very important observation you pointed out, sir. Coming to my next question, in the context of Indian markets, they react and they discount, and they are a barometer of the economy, and that reflects the overall performance of the industries and businesses going forward. And today we see that markets have actually discounted the probable events what are going to take place in this year. Uh, if you could elaborate on how much the markets have discounted today in the context of the Indian economy at large.
So Unnati, markets are always forward looking. They never look backward beyond a point. And today, markets are discounting that global growth will slow down, but Indian economy will do well. We will remain one of the fastest growing major economy. Second, our markets are also discounting continuity of government. Ab ki bar 400 par is something which is resonating with the market. Third, our markets are also discounting that corporate India will continue to grow at a faster pace and will remain profitable at current level of margin. So a lot of positive things market has discounted. On the global side, markets are discounting that Fed will start cutting rates and interest rates globally will be on the downward trajectory. Markets are also discounting, notwithstanding what's happening in Middle East, oil prices will remain subdued around 75 to $80 a barrel. So a lot of positive things have been discounted by the market because They are seeing that and they are confident that this will be the case going forward.
Very rightly said, sir, that markets always are forward-looking, and we did see that last year. The rally what we've seen in the markets is definitely outlook of the probable changing policies of the government that is going to come forward. That brings me to the next question, sir. That in context of these changes in the government policies, that today the government is bringing a lot of change, and there's a paradigm shift in the policies, in the way the decisions of the government is being taken. We are seeing that there's a strong domestic demand and a shifting demographics here. What are the key breakout sectors that you envisage will be in the next year going forward due to these changing government policies, which would lead to a strong domestic demand going forward?
So, Unnati, as you mentioned, the domestic growth will be higher than global growth. Companies which are focused on domestic market should do well. Now, if we look at government, what have they done? On one side, they are building infrastructure rapidly. Infrastructure which existed in 2013 is almost getting double in 2014 to 2024. Roads, highways, airports, port, power, rail electrification, new stations, they are almost doubling compared to what we had in 2013. Now, this requires cement, building materials, construction, power equipments, and so on and so forth. The government is also focused on Har Ghar, Har Nal, Har Ghar types. Now, that requires pipes. So, all the sectors which are engaged in domestic construction related activity of infrastructure, they will do well, be it cement, construction, building materials, pipes, fittings, and so on and so forth.
Very rightly said, sir. Even the infrastructure, I think infrastructure theme overall is playing out very well. And we do see that rally into the infrastructure and the PSU banks. Last year, we did see that rally. And as you said, that going forward also, these are the sectors which would benefit from the government policies, as this government is quite infrastructure pro. And um, that has been again discounted from the earlier point which you mentioned in the markets, that since they're forward looking, so we do see infrastructure theme doing well. uh, so recalling our last interaction in the knowledge series, you had advised and you did mention that India never disappoints, and not the optimist and not the pessimist, I remember. And in the worst of the dark situations, we might do better, and in the worst situation, in the best periods, we may not perform, and in the best situations, we may perform, or even we may falter out there. So, coming from there, sir, what are the potential risks and challenges that one might face? Because today we acknowledge that this 25-year period, what is the vision for the Amritkal period, there could be some challenges which India might face and which could derail the period of this Amritkal. What are these potential risks and challenges that could derail the Amritkal period?
So, Unnati, one, uh, continuity of government is very, very important. While all the government works towards similar objectives, the pace could be different. Today, we have seen that markets are discounting continuity of government. If there is any change over there, then certainly it can derail our growth estimates. The second challenge for us is globally. While we are doing well, others are scoring self goal. Russia went into Ukraine, it got shut from all global investors. China has designed on Taiwan. They have very, very debatable track record on IPR theft, and hence investors are cautious. Brazil has a communist government which is making investors again concerned. South Africa is witnessing high social strife, and hence there could be worry. So others are doing badly, and which is why no matter what we are doing, we are looking better and brighter than them. Now, this should continue. We are getting flows, we are getting recognition because we are scoring while others are scoring self goals. The third is the our push towards reforms. Clearly, we need to keep on accelerating reforms. From 1947 to 1990, India was left behind by almost all peers because we were not reforming ourselves. Thanks to Narasimha Rao government and Dr. Manmohan Singh, we pursued the path of liberalization. License permit Raj was removed, import duty was reduced, Indian markets, Indian companies were become competitive. We must continue on the path of reforms which has been accelerated in 2014, whether it's divestment of public sector enterprises, whether it's rule of law through improvement in judicial infrastructure, whether it's reducing government's role in businesses. They should be referee rather than also a player in the game. So there are many challenges which India has, but as long as we continue to focus on reducing those challenges, removing those challenges, I think India should do well.
That's very rightly mentioned, sir. But what also comes to my mind is that we are seeing rapid technological advancements happening, and AI, artificial intelligence, has the potential threat to disrupt a lot of traditional industries and sectors. What is your view on this one threat that could be a potential threat to the Indian economy, the traditional industries per se?
So undoubtedly, Unnati technology will improve. When I started working, there was a need for one person on every single textile loom. Today, one person manages about 6 to 7 textile looms. Clearly, technology will keep on improving. 20 years ago, what computational power and data analytics was available to the President of United States of America, same computing power and data analytics today a smartphone possesses and is available to an ordinary individual. Now, how do you leverage this data? How do you leverage this technology disruption? One is to become dinosaur whose tail was on fire, but by the time their brain realized it was too late to react. We have seen how giant company like Eastman Kodak did not react towards digital photography and ended up losing their entire business. We can't afford to join Eastman Kodak line. We have to be Polaroid and other materials, other companies. We have to be like Apple, which disrupts photography through their mobile phones. We will have to leverage this technology. Artificial intelligence undoubtedly has foundation in US and other markets, but we can find uses through this artificial intelligence, which provides better, cheaper, simpler, safer solutions to customers. People who can ride the wave of technology, people who can master technology to find better ways of doing same thing will be winners of technological disruption. People who act like dinosaur, they will be wiped out by technological disruption.
Very rightly said. So I think capitalizing on the technological disruption today, which is available with us, will make one a market player. That's a very wonderful input which you've given. Uh, so, what is your view on the PSU rally, which we saw last year? We did see a huge rally in the PSU, and how will that, how much is that sustainable going forward in this next years, which we talk about for the for the growth for India?
So divide all the PSUs in 2 by 2 boxes. On one side where floating stock is limited, and other where floating stock is reasonable, and on other side where businesses has improved and where businesses have not improved. Now assuming, let's say, oil marketing companies, their floating stock is reasonable, but have their business improved? Answer is no. Even today we don't know whether they will be able to price their petrol and diesel at market price. Tomorrow, god forbid, oil prices go up and election is ahead, jolly well they are not going to revise their petrol diesel prices. They will incur loss, but they will not revise prices upwards. Please provide very low valuation to such uncertainty. On the other hand, there are certain defense railway companies where floating stock is limited and their business undoubtedly has improved. But because floating stock is limited, valuation is at sky high. Be very, very careful in such counters. You want valuations which are reasonable, not which are very, very high. The third is where business has not improved at all and floating stock is low. Here it is completely avoidable. Don't even go near there. Finally, there is one bracket where businesses have improved and there is reasonable floating stock. Some PSU banks, some defense and railway companies will fall into that segment. PSU banks' business has improved because now there are no more Nirav Modis and Vijay Malias of the world in their system, their NPS. Their deposit growth is reasonably strong and they are able to compete with private sector banks on credit disbursement. So, my recommendation, be very, very cautious where floating stock is limited and businesses have not improved. Be very, very cautious where businesses have not improved, even though floating stock is high. Try to invest in those companies where floating stock is high and businesses have improved.
That's a very valuable input, sir. I think that growth is something which is the bottom line of any investment strategy. That boils down to that one advice. That was a very valuable input for all of us, sir. You were mentioning about valuation in your from the previous question. So one question that comes to my mind going forward is that equity mutual funds have seen huge inflows in the past, and we are seeing increasing monthly SIPs on a monthly basis. So, what would you advise investors at this stage when markets have already they've already overvalued and gone up and have peaked out at this point of time?
So, Unnati, within the market, there are multiple pockets. Normally, market is like this. The large caps have higher valuation, mid caps have lower valuation, small cap has lower valuation. This time market is like this. The large caps have lower valuation, mid caps have higher, small cap has even higher, and micro cap and mini cap are even higher. Normally, at this level of valuations, you don't make money. So, all people who are trading on SME exchange, be very, very careful. It's a flashing red signal. You cross at your risk. The micro cap, mini cap, small cap, be very, very careful there also. They are little less expensive than SME exchange. They have little more floating stock, but still they are valued at a high price. Partly sometimes it's concentrated in the hands of few people, partly because there is momentum and money is chasing momentum. This is also a red signal, and be very, very careful. If you are buying small and micro and mini today, take a very, very long term view. It's likely that in the near term you may face disappointment. Then comes mid cap. Well, they are little expensive over large cap, but not by much. It's an amber signal. try to be in good quality mid caps from a long term point of view. And then there is large cap. It's a green signal. One can invest over there. It is as it is fairly valued. So to summarize, green signal for large cap, umber signal for mid cap, and red signal for small cap, micro cap, mini cap, and SME exchange.
Very rightly said, sir. I think at Cedrus also what we follow is the as I think asset allocation is something which is the key foundation to sustain in this kind of a choppy market. Uh, so going forward, what is your view on the US ETF and passive investments? What is the way forward for these investments?
So as of today, Unnati, if you look at our small cap and mid cap funds, they are underperforming indices. And in some cases, they are underperforming indices by as high as 10-15% per year. It's a large number. And anyone will think, oh, I should invest in passive fund. But do remember, 3 years back, the same funds were outperforming benchmark indices by 10%. And at that point of time, large caps were underperforming benchmark indices. Today, large caps are outperforming benchmark indices, but small and mid caps are underperforming benchmark indices. So I believe there will be space for both active and passive in investors' portfolio. Sometimes active will do better than passive. Sometimes passive will do better than active. But today, do remember that many of the active funds are offered at a very, very competitive rates, and good fund manager will be able to add value over that rate or that expense ratio. So keep both in your portfolio. Both are needed. There is the performance is cyclical. Yesterday, my large cap funds were underperforming. Today, they are outperforming. Today, my small and mid caps are underperforming benchmark index. Tomorrow, they will start outperforming.
Very true, sir. I think having both in the portfolio with the right mix is the key to go forward. Uh, uh, Coming to the next question, sir. Can you please elaborate about the demographic advantage? How do you see demographic advantage working out for India, the positive advantage here?
So, Unnati, demographic advantages can be divided in multiple parts. One, younger people will work more and longer than elderly people. But in today's world, we are realizing if young people are not healthy, then healthy elder people will probably work more than the unhealthy younger people. The second is that younger people should work more than elderly people. But what if younger people are uneducated and elder people are more educated? In that scenario, elderly educated people will do more than uneducated young. Uh, Knowledge, the education can also be broken up into knowledge as well as wisdom. Now, a young IFA or MFD could be very smart and very well educated, but he will lack experience. An elderly IFA or mutual fund distributor may not be having as much as higher educational degree, but he or she has the experience. So when we look at demographic dividend, it's not just young versus old, educated versus uneducated, healthy versus unhealthy, and knowledge versus experience. It's a combination of all. If India has to progress, we must ensure that our people are educated, they have adequate knowledge, they can learn from their elderly's experience, and they are healthy. If this combination is met, then certainly India's Amritkal will see tremendous growth.
I think the youth, the demographic advantage is the true wealth for India, and that is in line envisaging that Amrit Kal for our country, sir. And I've said this also, I think we've always been propagating that health is wealth. And that is something which will lead that the youth is the true gold that India has today. Coming to the next question, sir, we've seen that there is a herd mentality with fund houses. Like when it comes to launching a particular category of scheme, we saw multiple NFOs in the for the in categories like multi-asset space. Prior to that, it was the asset allocation category, and recently in themes like manufacturing and business cycles. How does an investor choose which fund house he or she should invest with so many NFOs coming?
So, Unnati, one, they can ask an advisor like Cedrus, which are the fund schemes, fund houses, they should look at it. If I go to a new town and I want to eat somewhere, I will go and consult someone who knows that town very well and who can recommend कि नीलेश भाई यहाँ पे जाइए वेजिटेरियन जैन फूड अच्छा मिलेगा. So it's the advisor consultant with whom you can approach. The second is also your experience. If I'm going to stay in a town for 5, 6 days, I'll probably go to first place based on its brand. But if my experience is bad, I will run away from it. So, in finding out which fund houses to work with, you can start small, see what is the experience. Do they deliver what they say? Do they do what they promise to do? If there's consistency, then you can invest there. The third is obviously the mother brand. When we go out, uh, a McDonald or a such kind of branded restaurant, even though they are serving junk food sometimes, we feel more comfortable about quality. Same thing happens with financial services. Go with better brands, go with bigger brands. So ultimately, it is word of mouth publicity or advice from your consultant stroke advisor, your experience, and the brand behind the firm.
Right, very rightly said, sir. Uh, I would like to call upon and introduce Gaurav Gupta from Kotak AMC. He would also ask a few questions to Mr. Shah.
Hi, sir.
Hi, Gaurav.
Although you have covered most of the thing, just to elaborate further, like in 1980, if we look at the China and India, both of the country were like standing at the same point as far as per capita GDP. But now, if you look at the per capita GDP, there is a big difference. So, what kind of changes which we have seen in last few years or 10 years or in a decade, which can further take us to the Amritkal or to the developed market by 2047? If you can elaborate little more, that would be helpful.
Sure, Gaurav. So if we look at what did China do and where we failed, China became manufacturer to the world. We couldn't become so. When COVID virus came, they built a hospital in 7 days at Wuhan. Will we be able to name a hospital in 7 days? I have my reservations. The speed with which China executed things, the efficiency which China brought, resulted into China becoming lowest cost manufacturer in the world. Now, can we copy China model? Can I become as competitive as China? Answer is yes. There are many learnings from China's rapid development in manufacturing sector, and India certainly can copy some. The second challenge for us vis-a-vis China, well, China had a single pursuit of growth. In some sense, their government promised that don't ask for democracy, we will create growth. You don't do Tiananmen Square kind of demonstration, follow the Lakshman Rekha which we have laid out, and we will deliver you faster growth. Now, India is a democratic country. We can't push these reforms by force, as farm laws have shown. Farmers rejected what was good for them because they were not aware that this was good for them. How do I combine China's single pursuit of growth within democratic setup? That's possible by dialogue and engagement. So, for us to really achieve our potential of Amritkal, one, we have to become competitive through better execution, be it manufacturing, be it services. And second, we have to remove all the hurdles through dialogue and engagement which comes in the way of growth. At all cost, we have to pursue growth to become second largest economy along with China and America at a very close proximity.
Thanks for the detailed information. Further, one more question regarding the demographic advantage only. If we compare India versus China versus Japan, so what is your view as far as working age population and how you see this is an advantage for India?
सो गौरव भाई, अपना तो प्रॉब्लम एक ही है। 10-15 करोड़ लोग हैं जो एग्रीकल्चर में काम करते हैं, वो छोड़ के मैन्युफैक्चरिंग में काम करने लगे तो अपना प्रॉब्लम सारे सॉल्व हो जाएंगे। बट हाउ डू वी क्रिएट 10-15 करोड़ मैन्युफैक्चरिंग स्ट्रोक सर्विसेज जॉब? One is to provide skill, knowledge, education, and technical capabilities to the this Indians. This could happen through school, colleges, and online courses, and so on and so forth. The second thing is that even if I created skillful labor force, they need to be deployed. This is where we have to go and capture China plus one opportunity. The world today wants to move out of China in search of an alternative supplier. Let all of them come to India. By bringing global buying or global sourcing outside of China to India, we will create enough jobs opportunities which then can be filled with this skillful resources. Combination will create blistering growth in India.
Thank you so much, Gaurav, for those relevant questions, which Mr. Shah has given his valuable inputs and very rightly said that developing a skillful labor force is important today while we are looking for the Amrit Kal in the next 25 years. But engagement and seizing the China plus one opportunity is also very important going forward. Thank you, sir. That was a extremely intriguing and interesting point which you came up with. That brings me to the final closure of this session today. I would like your closing comments and advice to all our investors.
So, Unnati, my father is not there today. But if he was alive, I would have gone to him and said, Papa, when Colgate was coming at par, when Nestle was issued at par, when Hext Marion Russell was issued at par, if you had bought those shares, today I would not have any need to work. मैं आराम करता और आपके पैसे पे ऐश करता। My father would have told me कि बेटा, उस जमाने में कहाँ आपकी तरह कोई समझाने वाले थे, कहाँ सेट्रस जैसे डिस्ट्रीब्यूटर थे जो हमें समझाते कैसे निवेश करना चाहिए। न सीएनबीसी आवाज था, न ईटी नाउ था, न एनडीटीवी प्रॉफिट था, न नीलेश बजाज जैसा डिस्ट्रीब्यूटर था, न उन्नति थी, न नीलेश शाह जैसे फंड मैनेजर थे। तो मैं बेटा निवेश नहीं कर पाया। आई वुड हैव टोल्ड माय फादर कि ठीक है पापा, आपने भले निवेश नहीं किया, बट मैं अब मेहनत करूंगा, मैं अच्छी तरह से इंडिया के अमृतकाल के लिए निवेश करूंगा, ताकि मेरे बच्चों को पैसों की इतनी यू नो वो किसी के मोहताज ना बने. Fast forward 20, 25 years, when your kids come to you and if they ask, Papa, Mama, what did you do? Why didn't you invest when India was moving from fifth largest economy to top three economy in the world? When it was in its Amrit Kal? When in 2047 it was on its way to become Viksit Bharat? What will you say? आप तो ये नहीं कह पाओगे कि CNBC TV18 नहीं था, ET नाउ नहीं था, जी बिजनेस नहीं था. आप ये भी नहीं कह पाओगे कि नीलेश बजाज उन्नति नहीं थी. आप ये भी नहीं कह पाओगे कि कोटक म्यूचुअल फंड नहीं था. अपने बच्चों को जवाब देना बहुत मुश्किल हो जाएगा अगर आप ये अपॉर्चुनिटी मिस करते हो. मार्केट में उतार चढ़ाव आते ही रहेंगे, लेकिन लंबी अवधि के लिए निवेश करने वाले लोगों की फाइनेंशियल सिक्योरिटी प्रदान हो जाएगी, प्राप्त हो जाएगी. सो स्टे इन्वेस्टेड फॉर द लॉन्ग टर्म.
Very rightly said, sir. Long-term investment is the key for the wealth creation that today we all talk about. And निवेश करना कितना ज़रूरी है आज, और लंबे समय तक करना ज़रूरी है, वो सबसे इम्पोर्टेंट चीज़ आपने बताई है. Thank you so much, sir, for such valuable inputs. Your golden words of advice have helped us, and all our investors will help us in framing our investment strategy going forward. I'm sure अभी हम सभी इन्वेस्टर्स निवेश करेंगे तब एक लॉन्ग टर्म व्यू के साथ देखा जाएगा इस पर्सपेक्टिव को. On behalf of Cedrus Wealth Partners, I would like to thank Kotak Mahindra Mutual Fund for arranging this event. Thank you so much, Gaurav, for your interesting questions. And thank you so much, Nilesh sir, for your valuable advice as always. I would also like to thank all our viewers for tuning in such large numbers. And we will return next month with a new topic and a new speaker. Thank you so much, sir.
Thank you.
Thank you, sir.